Where do you have to go to? Welcome back, everyone. Episode 102. We got me in the house.
Oh, Tyler.
Tyler and Lisa. Should be a good episode here. We've coming off I heard rave reviews about Tyler's production of the episode 100 with all the old greatest hits. Yeah, I heard from several people that they enjoyed the trip down memory lane for the people that have been listening for a while. So
we should do this maybe once a year to go back to the prior year.
Yeah. I just, speaking of which, I looked at some of the stocks I think I was talking about that I thought would be big winners this year, and not so good yet. So good thing we're only a quarter of the way into the year.
Well, at some point, I know I was booted off the podcast for a little bit, but
he booted himself off.
Because we did all the predictions at the beginning of last year. We never really revisited.
No, because half the people are not here anymore, and so we never looked back at it.
But
okay.
And we just did one, right? End of the year.
So we could
with a loser and the winner stock.
Mm-hmm.
Maybe what I'll do
doesn't go so well for me this year. How about you?
No, that's what I'm saying.
Let's not revisit that now.
Maybe this year, maybe for episode 100 and what are we today? 102.
Mm-hmm.
Yeah.
Maybe for 103, since I have the mic for that one.
Oh, Lisa does, don't you, Lisa? Who's got the mic?
No, Tyler.
Oh, that's right.
Yeah, I'm 100.
Maybe we'll do some predictions for the remainder of the year, and then we can revisit those at the end of the year.
Sounds good. All right. It's been a busy week. We saw a longtime CEO, one of the largest companies in the world. I think it's number 2 right now, currently, I think NVIDIA passed Apple.
Yeah.
Tim Cook, longtime CEO of Apple, is stepping down as CEO and just going to be the chairman role. That was interesting.
That was surprising.
It was. The timing was.
He's not.
He's 65.
He's really?
Doesn't look like it.
Doesn't look like it.
Yeah, he's not that old.
No, he is 65.
How old is the new guy? He looks
50
young.
or 51.
Yeah, wow.
So
okay.
A little older than you, Tyler.
15-year runway, I guess.
Yeah, that's not a bad stretch. Speaking of which, all right, let's get to the question. 2 truths and a lie about Apple and Tim Cook. Tim Cook has been the CEO of Apple for over 14 years, and during his tenure, the market cap increased $2.5 trillion. B, Tim Cook's net worth is worth $2.5 billion. C, under Cook's leadership, Apple launched Apple Watch, AirPods, and Apple Pay. I'm going to start with Lisa's got a nice spring outfit on today. I'm going to say, Lisa, why don't we start with you?
Yeah, why are we dressed so nicely today? Maybe we should take a note on that. What's happening later today?
Unless you're watching the video and seeing Tyler here, I don't know.
Yeah,
a little less. So.
Well, I took my sweatshirt off and I have like a striped shirt on.
That was
It was like a weird. Like on the camera, it looked really weird.
So Tyler's trying to drive everybody to the video side of things to see his weird looking.
But anyways, we are nicely dressed today because you have something to celebrate, Keith, right?
Oh, I forgot to mention. Why don't you tell us what we're celebrating?
So we are celebrating GI, Gradient Investments, hit $9 billion in AUM yesterday.
Where's the clap, Tyler?
Right, now it's the clap. I swear it's way more louder in my headset.
It is.
Anyways, so we hit $9 billion in AUM. It's fantastic. Every time when we hit another billion, we do something fun to celebrate that. And today we are, doing a little team photo with like what have
video photo
video with confetti poppers, and we are making a mess outside of the building, and so
should be interesting.
It should be interesting. Maybe we can show a picture. Next episode
for
our viewers.
We'll get it pulled up.
We get it pulled up. Yes. So
I think Lisa's also stalling here on getting to the answers to my question.
Exactly, I am. So let's get back to it. Sorry, I diverted a little bit for a minute. So under Cook's leadership, Apple launched Apple Watch, AirPods, Apple Pay. Yes, because he was in the reign like over 15 years, and that's pretty new. So yes, that sounds reasonable. Tim Cook's net worth is $2.5 billion. I'm not sure about that, but also seems pretty reasonable to me. Maybe you tempered a little bit with the number here. And he was the CEO for over 14 years. Yes, it was 15. Market cap increased 2.5 trillion. I think it's more than that. Yeah. I don't know. Either his network is not 2.5 billion or it's more than 2.5 trillion.
Boy, it's a
market
struggle
cap.
this morning.
No, it's more than 2.5.
Okay.
Definitely.
Confidence. I like it.
Yeah, A's alive.
Tyler?
A.
Wow. And same rationale?
Well, 15 years. But Apple's market cap has increased. Because what's the market cap today?
4 billion.
4 trillion.
4.1. Yeah, 4 trillion. Excuse me.
And I think he took over when it was like
It was not even a trillion.
700 billion, maybe 500.
It was
billion.
not. It was not
So,
a trillion.
There you go. Well,
So.
so you both were right. It's the trick part was the 2.5 trillion was at more like 3.6 or 3.7. So it's like 400 billion, by the way.
Yeah.
Mhm.
Isn't that crazy to think about?
Crazy. Yeah.
Now it's because everybody, obviously, the founder of Apple, Steve Jobs, visionary, and
Yep.
market cap was only 400 billion, and he's kind of because Tim Cook was kind of considered like the operational guy,
Right.
kind of the
Which was
shepherd of.
interesting because, like you say, some people said, okay, he was not the best CEO and he was kind of just the operations guy and all of that. But I mean, at the end of the day, he delivered like 15
he's kind of
years
been
of
known
steady
as the
growth.
buyback king. Like
Yeah.
you're not doing anything innovative. All you do is buy back stock. That's
Operation-
kind of the rap
operational
that he's always gotten.
Yeah,
But I mean, he has come out with like you have on here,
Mhm.
Apple Watch, AirPods.
I think
Apple
I would
Pay.
say those are kind of not as
They're not,
exciting
like,
as
visionary, but,
like an
I mean-
iPhone or an iPad, right?
Well, AirPods are pretty
And
cool.
like the Vision Pros have kind of fallen flat. a
Yeah,
little
that
bit.
was really not
Um,
that. So what are you thinking of the new guy? Because the new guy already gets some heat because now that we are in the AI era and we need another stellar product from Apple, and he is the hardware guy.
Mhm.
So some people are saying, okay, well, I don't know if he's the right person for the job because he's so hardware focused, because he led that division. Maybe we need another one more focused on AI and more on the software side. I mean, I don't know, right?
I've
was
heard he's
thinking
kind of
about your
somewhat of a
opinions.
visionary, kind of like a not Steve Jobs, but Steve Jobs-esque.
Mm-hmm.
And
It's probably what they need at this point in time. A little
probably
more vision, right?
Mhm.
yeah.
Even though his background's
From
hardware.
from a
so-
company like Apple, you need to have more of a visionary of like
Mhm.
where's the product roadmap going? Because I mean, Apple is what 80% is hardware
Mhm.
of their business,
a little less, but yeah, some right around there.
right? So like you need to have some type of visionary.
Yeah.
Yeah. Well, it looks like it pays well to be the Apple CEO too.
I would imagine, yeah.
So
Two
it's
and- 2.5
really
2.5 billion.
2.5 billion.
Yeah, which is that's a big number considering most of these guys that are worth those kind of net worths have serious ownership in companies or they were their companies. To have a CEO again, now he's I'm sure got a ton of shares along the way and the value he's
What
created.
did you say? 3.7 trillion.
Yeah, and that's
market
what
cap?
I was going to say. That's
I mean,
warranted.
that's a pretty good trade-off. You grow a company $3.7 trillion and
Yeah.
you get $2.5 billion in return.
Yeah, no, but it's usually
a
the
small
person.
percentage.
It's usually the person that founded the company,
Yeah.
right?
Yeah.
Or kind
Yeah.
of has. But to your point, it's the value is created. I have no problem with it, but I was a little surprised it was that much.
Yeah.
That's all.
But overall, like for Apple CEO wise, I mean they're a 50 years old company and they haven't had a whole lot of CEOs. So they usually their tenures are very long, very steady. Which also kind of gives a little bit of,
Yeah. All right. We'll
whatever.
transition from the Apple to rest of tech, which I saw an interesting chart this week, and I'm a big valuation at a growth rate, kind of what people refer to as PEG, PE multiple divided by your growth rate. And I think that kind of normalizes valuation as a whole for different sectors, industries. And saw an article saying that tech is now the cheapest PEG versus a bunch of different sectors and industries, even European stocks, which
But that was astounding to me. It's like, oh, really?
yeah, so that's what Lisa. What are your thoughts when you kind of saw that chart? And because everybody always says how cheap Europe is, and again,
Yeah.
we always talk about it's cheap, but the growth is a lot slower.
Mhm.
But now to say, everybody always says, "Oh, tech's so expensive," but it's come back on valuation. And oh, by the way, you look at the growth rate, and
Yeah.
its peg is less than that. So I thought it was interesting.
I mean, I think that's like kind of still a little thinking of the past that Europe is so cheap. I mean, it has, done a lot last year. It was one of the best performing equity markets last year. So it kind of,
Yeah.
did a
So
lot of catch up. And tech had some struggles coming into this year, was driving performance in the S&P basically over the last 3 years, and coming into this year with the whole market broadening out.
Yep.
And then we had some software AI jitters. Investors are not getting nervous and seeing a return and all of that. So the tides have turned a little bit, but still astounding to me that it's cheaper than Europe. So I didn't think of that much change in
So
such a period of time.
What about you,
But,
Tyler? What do you?
Well, you've had valuations come in. So your traditional PE multiples, like my favorite stock, Broadcom, it's come in. But even if you look at if you look at a lot of the Mag 7, and I know we have Mag 7 on here, but like Google, Microsoft, like they were trading cheaper than the market for a while, despite having more growth. So like it makes sense that tech is on a PEG ratio, but the problem that I have with grouping the tech together is you've got software in there, and nobody wants to touch software right now, just because you can vibe code pretty much anything that you need. So it does make sense, because you probably still have, like, on the software side, you still have contracts that these companies are in, and so they're still in the contracts for the software side. So you still get the growth of the software, but if you start to look out 2-3 years, that's where the software concern comes in. So I think it makes sense that they're trading at a lower peg. I think you have to be careful with where you're looking within tech right now, though.
Interesting, because historically, been doing this a long time, the semiconductor has been more considered cyclical, right? And they would have valuations of,
Not cyclical anymore.
according to Tyler, not cyclical anymore. It makes me a little nervous too. Yeah, if you dig into tech.
But I mean, like Broadcom, Google, Anthropic, Meta, 3-year deals.
Yeah.
Right. So now you have visibility into the next 3 years of like a base revenue.
Assuming anything doesn't change.
But also, do they add on OpenAI? Do they add on additional AI type companies?
Yes, and then you're starting to see other companies develop chipsets that are probably cheaper, like Google's deal with Marvell. Yep. That's my only point. So the whole category I think is cheap. Tech's at 1.5. The S&P as a whole is at 1.8. Which one of the things I always kind of chuckles and kind of scratch my head at is, the companies that are considered kind of safety trades, they're never cheap, like Staples Utilities. They're trading at pegs of 3.5 to 2.4. It's just like, that's just insane for the level of growth you're getting into, whether AI is impacting these or not, and the build out utilities. And I get some of this, but I do think if you can, now's the time.
People invest in utilities for like Treasury plus for yield.
Yeah, but you're still paying a high multiple for that.
Yeah, but
relatively recurring.
Utilities have always been 20 to 25 times, despite their debt levels. And
correct,
because they do their rate caps, and for the next 3 years they're going to be earning 8% growth on their revenue and earnings, and you have the visibility that you normally don't see in other sectors.
Yeah, but that's also why, if you look at history, that utilities are 3-5% of the S&P, whereas tech used to be at 15% and now 35%. So what was been your better trade longer term? I would have said
for sure
tech.
Yeah.
So now the point being is, what I'm making is tech is at a relatively cheap spot. We've talked last year, this year, that I've been generally thought they were more expensive, sell them off last fall, and now I think the time to get back I think the point of this whole thing is, I think it's time to start doing a lot of work on that space and start to find out who we look out the next year, who's going to be winners and losers. And you mentioned exactly right. Software, the growth rates may be fine this year, but at some point in time they trade. Yeah. But now you're trading at stuff that used to trade at 50, 60 times PE levels, where now semis are trading at. Now we're trading at 10, 12, 13 times PE multiples, which I think it's worth taking a look in to see whose business model is sustainable. I mean, not all of them, not all are going to be vibe
there's gonna be
coped away.
winners and losers.
Yeah.
But I think you have to be careful on the tech side, despite the 1.5 peg.
But the 1.5 is also looking at those higher valuations on semis, right? So that's the Tyler and I are kind of just, he sounds like he's permanent semis are going to be the next 10-year leader in stuff.
For sure.
Dead for 10. I think there's somewhere in between.
I would not put like software to the dads.
No.
But you have to
be
careful
if you're going to ask me who the leader is in
software.
tech, if you're going to ask me who the leader is in tech, it's the hardware.
For now, and then there's everybody seems to forget about DeepSeek, and I just saw some
things can change very quickly.
They could change quick. Look at it. I mean, that's where all of a sudden you get, say, a chipset, something that we don't think about.
Yeah,
all of a sudden just can totally disrupt that whole thesis, and also now you're trading at a 40 times PE multiple where you used to trade at a 12, and it's like, oh, I thought these weren't cyclical, and then they are. That's
but if you think about the AI build out, we were talking about this yesterday. Like the backlog for data centers right now is like 11 years or something.
Yeah. It's crazy. GE
so like
Vernova just reported this morning and blew away the numbers. And it's been a great stock for a year and a half and not cheap. It used to be as a wind farm, but now it's more the data center build out.
But you're starting to get visibility into semiconductor earnings. You're starting to get visibility into some of these industrial names, which is probably why, I mean, industrials are probably more expensive than they should be, but like that's why they're trading so expensive, is because you're getting the visibility into future earnings that you normally wouldn't get. Like utilities have been known to be, because you know what the rate caps are, for the next 3 years or 5 years, whatever state they're in or county they're in, what their earnings visibility is going to be for that time period. And so they trade at a higher multiple because they're consistent. You know exactly what you're getting. Maybe you get 5%, maybe you get 6%, 8% at the high end, usually on utilities. So they trade at a higher multiple. But now you have the visibility into the industrial side because you do have this backlog of data centers. You're getting visibility into the semiconductors because you know how significant role they play in the AI trade right now. So I just think from a leader perspective, it's probably going to be a little bit different. And I think the semis is kind of that. And yes, there's going to be innovation. There's going to be smaller chips, more energy efficient. But I just think the demand for custom chips, the demand for chips to power these data centers, to be able to power the large language models, the universe that we're going to is AI.
Yeah.
And so you need the chips.
Yeah, no, this is an interesting topic. I think we're in the early innings. We're second, third, 100% true. What you're saying is 100% true. I have a sneaky suspicion something in the next, it won't be this year, I don't think, but the next 2-3 years, something's going to come out that change the trajectory of what you're talking about. Could accelerate it, could just replace it, could also change the pivot to something else. Like who would have thought 3 years ago we were talking about, Microsoft buying nuclear and kind of power so important, things like that, right? I think there's going to be something that does.
Well, I think quantum computing, that's not on a lot of people's radars. I mean, it's kind of talked about, but I don't think we fully grasp from an investment standpoint, the capabilities of what it's going to do for not only AI, but every other industry that we oftentimes talk about.
Yeah. Lisa, is there anything that I guess we're kind of, the reason I brought the subject up, I just thought it was interesting that it's cheaper than everything else on a PEG ratio. Is there anything that you're kind of looking at in besides precious metals in your universe that's kind of like, oh, this is kind of an interesting time, or we're in earnings right now, so
I mean, it's interesting because given like earnings growth, and I just saw a chart, and we talked about this in a prior episode, that usually Wall Street analysts come in a little bit optimistic and then revise their earnings down as we progress through the year. And so far, 2026 goes the exact opposite direction. They increased earnings expectations by about 4%.
Yes, that's
does
amazing.
Not happen.
No.
That is very unusual, and that tells us like the despite like everything that's going on, despite tariffs and energy prices and war and all of that, there's a lot of optimism still. So I don't know if we see some revisions soon or not, but there is something that really gives analysts a lot of positives to revise their earnings so much compared to past episodes, despite all the concerns that we have. And interestingly enough, I mean, tech is again Mag 7 again expected to carry the brunt of that growth. But when you strip out Nvidia from the Mag 7, the other 493 companies are expected to grow faster, which was interesting to me. So we see again this whole broadening out, the other 493 kind of are doing their job is still playing out, and we kind of saw that in the beginning of the year. Then it went away with the conflict and all of that, but we see it coming back, right? International still strong, small cap still strong. The other 493 companies kind of expected to grow double digits as well, and carry their weight. And I saw an interesting chart to that yesterday. So the weight of the Mag 7, and again, there's discussions of what's Mag 7 and whatnot, right? Is Tesla still in there, or has Broadcom kind of taken over?
Well, we know what Tyler's opinion is on that.
We know what Tyler's opinion.
Broadcom is technically in the Mag 7.
Right, but
the initial still... Mag 7 has Tesla. Tesla's out, Broadcom's in.
But it's still not
version.
Like a full, full agreed upon.
I would agree with you on that, Lisa.
I don't discuss, so I didn't want to start a discussion here. But anyways, I saw a chart of the weight of the Mag 7 within the S&P, which is about 31% right now. It's the same as it was as in July of 2024. But the S&P has grown 28% since then. So that's what we are also seeing. Hey, that's the same weight, but the market has grown significantly.
So everything else is keeping up.
So it also, it's not only the Mag 7 that are keeping up, right? So we are really seeing evidence that there is something going on, and this broadening was not just a blip in the matrix, so to speak, which was kind of interesting to see it from that side.
Yeah, it's been a interesting start to the year. We'll switch gears here a little bit, in which we get this question, certainly getting it 2-3 weeks ago. The market's selling off. We did our quarterly update. Markets were down, I think, a little over markets. The S&P was down over 4% end of Q1. Fast forward a couple weeks, and markets are setting all-time highs.
We're up 4.
Doesn't the market realize a war is going on, Tyler? What are your thoughts on kind of how we talk about positioning, and kind of, is it a little bit counterintuitive that where we're at? And then there's another chart we can jump.
I mean, I think it goes back to what we've been talking about. So, yes, is there concerns of oil prices, energy prices? Absolutely. Are there concerns that it could have an impact on consumers? Yes. Could it have an impact that the Federal Reserve increases interest rates? Yes. But when you look at what actually drives the market, like Lisa brought up, the earnings expectations is really what the market. You can have all of the noise in the world going on, but if the S&P 500, the aggregate earnings are expected to grow from 13% and they go up to 18%, that's a pretty good backdrop for the market to continue to rise.
Yeah, I saw some guy put it at 19 yesterday. I'm like,
really?
So it's even another.
So it's not that the market's not concerned about what's going on in the Middle East. Because it certainly is, because it can have an impact on the companies and the margins and consumers and spending and everything like that. But at the end of the day, if companies can adjust their budgets to account for higher oil prices, and whatever they do inside their accounting practices, and make sure that they still get that 18% earnings growth, that's really what the market cares about. And then you also talk about the market coming down from a 22 times valuation to a 19.5 to 20 times. Like, that's a better backdrop for the market going forward. And so all of a sudden you have this drawdown of what was the drawdown? It wasn't an official correction.
Not even 10%.
So it was like 9 point something.
Yeah.
So all of a sudden you have this correction, and we've talked down here multiple times about retail buyers coming in, buying the dip because of how prevalent trading is and how prevalent people are on watching CNBC and like keeping up with the markets, and people just buy whenever there's a dip. So I think the combination of the retail buyers plus the opportunity that you have in these mega cap tech names that are trading at lower multiples than the market despite getting higher earnings growth, I think led for this rebound.
Yeah. Lisa, got any thoughts on kind of what's happened here recently and kind of we're now at all-time highs? And
Right. I mean, we see it like in historical charts, what the market is doing in times of conflict, that we see some jitters and usually a sell-off. And then it successively kind of rebounds. The interesting thing here is the rebound, and to Tyler's point, was very fast. Kind of what we see a little bit, what we saw last year with the Liberation Day. It was one of the fastest recoveries in history. It was again. Usually we say, hey, the markets take the elevator down and kind of the steps up. That's not what it is at the moment, right? It's both the elevator down and up, and kind of a lot of V shapes when you look at the past couple of years. Part of it is retail investors, yes, that the younger ones especially are just used to that type of recoveries, and buying the dip is usually proved very, very positive for them. There was not a really prolonged, outside of 2022, that was a little different story. But other than that, it was not really a prolonged downturn for long. The interesting thing is also when the market, how fast the market went from overbought and full-blown panic to oversold and full-blown, hey, I want to get in there. And it was the second fastest recovery from sold to overbought on a relative
and it was
strength
fast. Was that what it
indicator.
was?
11 days.
Wow.
Fastest in history.
I think you have to be careful though, because I do think the longer this conflict goes on, I think the more impact it has on the market.
But then we see impact also on earnings expectations and how businesses are doing with it and all of that. And when we're seeing that, obviously, and expectations coming down and inflation is still, sticky, and we saw that already with some reports, then certainly that would maybe, change the trajectory.
Yeah. So that gets to the point of, everybody's nervous on the sell-off. We've had a nice snap back. We're setting all-time highs. And then again, we read a lot of stuff. We find things interesting. And another one we always talk about buying at all-time highs. And don't be afraid of it. But the one that surprised me was a chart that said since 1989, buying at all-time highs. That means you're buying, like now you'd be buying. You're not selling because it's at all-time highs. It's outperformed, which I thought was like, that's
interesting.
That's a crazy stat.
I love the stuff that Charlie Baleo puts together.
Yeah, this is a chart from him.
Very interesting.
But like you wouldn't think that if you invested at all-time highs versus other periods that you'd actually outperform.
Yeah, and you think it'd be close, right? Because 3 out of 4 years are up, so right, it makes sense that you're buying. But it's like you always hear the buy low, sell high, but you shouldn't necessarily, just because markets are setting all-time highs, if the backdrop, especially earnings, are so positive. We've been very constructive versus other people on this year. And again, we'll see how the late year plays out. We're up. The S&P is up 4% roughly, but buying at all-time highs has been the right thing to do. 1 year is, here's some stats. On a 1 year performance is 13.6. Buying other periods is 11.9. So outperformance. 3 year was 46 versus 39. Buying an all-time high. That's crazy. And then for the 5 years, 82% versus 74. So for any time in the last 5 years, you've been better off.
That's wild.
So, and then you can look at the decades of how many on average. I think it was the number of all-time highs within a decade is like 170. So it's 17 per year. And so I think the 2020. So what are we halfway through? And we're already at 180.
Yeah.
So
because I saw a different stat on that, because that's as of August 2025. Yep. I saw one that says in the 2020s so far 206.
Oh, so now we're up to 206 already.
206,
we're probably higher because the last couple of days.
Yeah, good point. So because we're setting new highs
later in
right?
Which is interesting because we are not the full decade yet, and in the 2010s, where this is a full decade, is 242, and we are now at 206. So it's really, a lot more.
No, it's interesting,
So
and I think part of it we kind of alluded to why do we get these these corrections so quickly up and down? It's part of it. I think retail investor. I think everything's kind of got compressed, whether it's AI, computer trading, whatever it is. I think
Well,
everything's faster, and
yeah,
your
and
downs are down.
we talk a lot
quicker than
about
your ups
shoot
are up.
first, ask questions later,
Yeah.
Mhm.
right? So it's like if you think there could be an impact on the stocks that you're investing in because the Strait of Hormuz is closed and there's a war in Iran, you sell it off.
Yeah.
And then
Then you think about it.
you
yeah.
think about it, and maybe you buy it back lower. Like there's
Mhm.
just there's no like holding through
No.
the period. It's just sell it off.
I mean,
figure it
also
out.
with the news cycle, right? It's just so much, and there is not a lack of information, and the information spreads so much that this is also has something to do with how fast information
Yeah.
gets processed and sometimes wrong.
When we get questions all the time of what are you doing in your portfolios right now?
That's what it is like.
And like it's a fair question, but also at the end of the day, we don't know the impact that higher oil prices are going to have. We don't know if the company's going to push the prices through to the consumer. We don't know if the company's actually going to eat it in their margins. We don't know if they've already secured enough oil to get them through this, right? There's a lot of unknowns. So
tariff paybacks coming up.
payback out,
Yeah.
Maybe
That's
we'll talk
another
about
old.
that
Yeah,
That
I
kind
know.
of flew under the radar.
Yeah,
I mean,
that was a quiet
the
one.
government is ready to
166 billion.
166 billion, and I think
Was it
over
33
60 is immediately.
3,300 companies have already signed up.
Yeah.
Something like that. Anyways,
Yeah, we'll get to that next
but
week.
like there's just so many uncertainties of the actual impact it's going to have on companies. So from our standpoint, we don't sit there and just sell off all the stocks in our portfolios because we're not sure. We want to hold them. We want to see what the actual impact is and make a true fundamental determination on
Yep.
the companies that we're investing in.
Yeah, so it's not like a broken record sometimes, but it's like we are, making changes actively where we think things are where it will be a year from now. But sometimes these unknowns, you're better off if you like the stocks that you own for the high quality reasons that you own them. If you think there's going to be marginal impact, you're sometimes better off just not doing anything.
Yeah.
And
It's hard
not
being
doing
patient, too.
something is also a decision.
It
you
is.
know,
Yeah.
it sounds counterintuitive, but not doing something doesn't mean not
Right.
looking at it or not making a decision.
Yeah, right. Well said. Let's jump to the end here. We'll just talk a little bit of fun, a little springtime action here. So, Lisa, you getting a little spring fever? I always, once Easter's over with, I kind of, get, you hear about spring fever, and it's supposedly it's actually real phenomenon. Just so you guys know,
Okay.
I don't know what study it was, but I read that the other day. I'm like, that sounds
Mhm.
interesting. So, thoughts on spring? Or you got the cabin fever ready to roll, or are you indifferent towards spring?
No, I love spring. I mean, I love when you kind of see the green buds coming back and the leaves starting to form. And Minnesota obviously is later to the game.
Yeah.
Because it's a little bit colder for longer here. So that's the final sign of, okay, it's over. It's that
It's
the grass is coming through. And also, the birds are chirping in the morning because they're all back. And when you kind of wake up in the morning and hear the birds, it's also kind of a good sign for spring that gets you in the right mood. It's a little bit warmer. You can open the windows and all of that. So I think it's a real thing. So at least I feel that in my mood that it's getting better. Yeah.
Tyler?
I love spring, except I have allergies. So
Is that why
I was sick last week, and now I've got the allergies kicking in this week. So as much as I love it, I also hate it just because I know what it means for me.
All right.
And just a couple of weeks of being miserable.
But your boys got I would imagine this is going to be nice to get them out of the house more than normal, right? Just because we get the sandbox going, and you got
sandbox last night. We even got the hose out last night.
Whoa, that's aggressive.
I mean, it was warm yesterday.
Yeah, it was 70 something.
So they, I mean, usually in the summers, the boys shirts off.
Yeah.
So they had the shirts off last night, running around in the backyard with the hose, spraying each other. So that was fun. But yeah, I love spring.
Yeah, no, spring's good. I like it too. So the same thing. It's the weather's great. The windows are open. The birds. The two things that I always think of spring is Minnesota loons. We live on a lake.
Coming back. Yeah.
They're back. They were back a couple weeks ago, and then the robins. You've seen the robins. They're all over the place for the birds.
Do you hear the loons from your house?
Oh yeah, for sure.
They have such a special.
Yeah, that's why it's just cool.
Yeah.
It's
sound.
The ducks.
In my backyard, there's a family of ducks that live kind of in the brush in the back area. It's like when it rains heavy, it'll turn into a little bit of a pond, and so they constantly walk
moved
from
in.
one side to the other side and then back. And so,
They're back.
they're back.
No, it's a great time. So spring is fun. Now we're in for earnings season. We're right in the thick of things. So expect next week we'll have probably a little bit of an update on earnings and where we're progressing. But so far so good on the earnings season. So all right, everybody.
The first Mag 7 company is about to report today.
Oh, we'll get Lisa's update on that. So we better go brush it up. We need to look nice for our pictures we're taking here in a little bit for our 9 billion celebration. So all right, everyone, like and subscribe.